Borrowing costs, Philippine Accounting Standard Number 23. This is in page 355 of book by Valix, Chapter 17.
So when we say borrowing cost, it is the interest and other costs incurred by an entity in connection with the borrowing of funds. So kung titingnan yung word na borrowing cost, it is a cost na ni-incur mo because ikaw ay nag-borrow, nangutang, or nag-loan. Hindi pa dito natatapos yun kasi hindi lahat ng borrowing of funds ay capitalizable ang borrowing cost or ang other costs na related dito. Borrowing cost includes the following: interest expense calculated using the effective interest method, finance charge with respect to finance lease, and exchange difference arising from foreign currency borrowing to the extent that it is regarded as an adjustment to interest cost. So, kaya sinasabing exchange difference dahil tayo nga ay naka-peso currency and then meron tayo nakaka-transact na foreign currency. So, there is a difference. So, yung exchange difference na related sa borrowing na inia-adjust natin sa interest ay kasama sa scope ng Philippine Accounting Standards 23 or PAS 23. Qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. It means that it is a long period of time, and remember, kung walang qualifying asset, walang borrowing cost na i-capitalize under PAS 23. Example, nagpatayo ka ng sarili mong mall. It takes a substantial period of time. It means that it takes time para i-build or gawin. Hindi ito na-acquire by purchase kundi by construction, making, or by production and to get ready for its intended use or sale. So, pwedeng ito ay gagamitin for operation or ibebenta as inventory. So, yun yung tinatawag natin na qualifying asset. Ang key terms dito ay yung substantial period of time. Examples include the following: manufacturing plant, syempre ginagawa to kina-construct. Power generation facility, intangible asset, and investment properties. All of these examples can be a qualifying asset as long as it takes a substantial period of time. So let's talk about a not qualifying asset. It is important for us to know because related sa qualifying asset yung loan at borrowing cost na kailangan natin i-capitalize sa particular qualifying asset na ito. Financial assets and inventories that are manufactured or otherwise produced over a short period of time are not qualifying assets. Kapag kasama sa financial assets kagaya ng cash and cash equivalents and receivables, yung mga investment in marketable securities, those are not qualifying asset because it does not take a substantial period of time, and also inventories na manufactured within a short period of time, yung mga recurring, di daw siya qualifying assets. Assets that are ready for their intended use or sale when acquired are not qualifying assets. So, kung bumili ka daw ng inventory and ready for sale na siya, or bumili ka ng property na intended for use, hindi na siya kasama sa qualifying asset. Again, if we talk about qualifying asset, it is all about taking a substantial period of time. So, let's talk about the excluded from capitalization. The first one is asset measured at fair value, like biological asset and investment property. So as long as it is measured at fair value, it is excluded from capitalization. Inventory that is manufactured in large quantity on a repetitive basis, such as maturing whiskey, even if it takes a substantial period of time to get ready for sale. Paulit-ulit mo daw mina-manufacture yung inventories at a short period of time with a large quantity on a repetitive basis, i-exclude daw siya sa capitalization. Non-qualifying asset. Syempre, hindi din kasama ang mga non-qualifying asset kung saan i-capitalize mo yung value ng borrowing cost. Commencement, suspension, and cessation of capitalization. So when we say commencement, there are three conditions. The first one is it incurs expenditures for the asset. Ibig sabihin, before you build an asset, talaga merong mga ginastos or na-incur and expenditures. And the second one is it incurs borrowing costs. So, syempre, dahil nangutang ka, then dahil may babayaran kang interest on that, so mag-incur ka ng borrowing costs. And last one is it undertakes activities that are necessary to prepare the asset for the intended use or sale. So, sinasabi dito na pag yan na ready-made na binili, yan na hindi na qualifying asset, hindi na siya kinoconsider. So therefore, capitalization of borrowing cost will not be a part of asset kung ano man yung binili mo. Pag sinabi kasing capitalization, isasama mo daw yung value ng property or a qualifying asset. Suspension. It is an entity shall suspend capitalization of borrowing costs during extended periods in which it suspends active development of qualifying assets. So kapag nagkaroon ka ng extensive period, tinigil mo na, sinuspend yung paggawa ng qualifying asset. For example, tinigil mo na ang paggawa or pagtayo ng mga building or facility. So suspend mo na ang pag-capitalize ng borrowing cost. Another example of this is that when an entity redirect its workforce into the development of another asset's capitalization is not suspended if there are any delays in direct work that is necessary part of the development. And lastly is the cessation. An entity shall cease capitalizing borrowing costs when substantially all the activities necessary to prepare the qualifying asset for its intended use or sale are complete. So, titigil daw ang pag-capitalize mo ng borrowing costs kapag substantially, pag sinabi natin substantially, halimbawa sa mga building, almost done na siya or more than 90% complete na or almost 100%. All activities necessary to prepare the qualifying asset is complete na. In short, almost complete. So, doon na yung time na ititigil natin ng pag-capitalize sa borrowing cost doon sa value ng qualifying asset. Ibig sabihin, kung hindi ka capitalize, isa lang ang patutunguhan. I-expense outright mo na siya. So, yung interest expense na sinasama mo pa sa value ng qualifying asset, is ititigil mo na daw siya at i-recognize mo as interest expense. So remember, commencement, kailangan all of the following conditions should be met, and suspension kapag may extended period, then na-suspend yung active development, and lastly is the cessation is kapag substantially all the activities necessarily are complete. Asset financed by specific borrowing. PAS 23, paragraph 12 provides that if the funds are borrowed specifically for the purpose of acquiring a qualifying asset, the amount of capitalizable borrowing cost is the actual borrowing cost incurred during the period, less any investment income from the temporary investment of those borrowings. So, to compute for the specific borrowing is capitalized borrowing cost is equal to actual borrowing less investment income. So, for the illustration, at the beginning of the current year, an entity obtained a loan of 4 million at an interest rate of 10% specifically to finance the construction of new building. The building was completed at the current year end. Availment from the loan were made quarterly in equal amounts. Total borrowing costs incurred to 250,000 for the current year. Prior to their disbursement, the proceeds of the following were temporarily invested and earned interest income of 40,000, so the actual borrowing cost is equal to 250,000 less the interest income from the investment of proceeds is equal to 40,000, so therefore the capitalizable value of borrowing cost is 210,000. Asset financed by general borrowing. PAS 23 paragraph 11 provides that if the funds are borrowed generally and used for acquiring a qualifying asset, the amount of capitalizable borrowing cost is equal to the average carrying amount of the asset during the period multiplied by a capitalization rate or average interest rate. However, the capitalizable borrowing cost shall not exceed the actual interest incurred. The capitalization rate or average interest rate is equal to the total annual borrowing cost divided by the total general borrowings outstanding during the period. No specific guidance is provided for general borrowing with respect to investment income. Accordingly, any investment income from general borrowing is not deducted from the capitalizable borrowing cost. So for the illustration, an entity had the following borrowings on January 1 of the current year. The borrowings were made for general purposes and the proceeds were partly used to finance the construction of a new building. 10% bank loan is 3 million for the principal and 300,000 for the borrowing cost. 12% short-term note is 1,500,000 and 180,000. 8% long-term loan is 3,500,000 and 280,000 for the total principal is 8 million and 760,000 for the total borrowing cost. The construction of the building was started on January 1 and was completed on December 31 of the current year. So here, the total expenditures on the building is 4 million. The capitalization rate is computed by dividing the total annual borrowing cost by the total general borrowings. Thus, 760,000 is divided by 8 million equals to 9.5%. The amount of capitalizable borrowing cost is the average carrying amount of the building multiplied by the capitalization rate. So, 2 million times 9.5% is equals to 190,000. The capitalizable borrowing cost shall not exceed the actual borrowing cost. The amount of 190,000 is the proper capitalizable borrowing cost because it is less than the actual borrowing cost of 760,000. The excess of 760,000 over 190,000 or 570,000 is charged to interest expense.